I gave people free tax advice on how to wipe out their entire taxes, and the internet went wild. They called me a fraud, they called me names, and I'm like, Twitter fingers. But I'm here to double down on two things. Number one, trolls don't hurt my feelings because what they don't know, they just become really loud. And it's truly not their fault, it's the tax system fault. And number two, I'm here to explain to you in less than a minute and a half why this is true and why you can do what rich people are doing. My name is Anna. If you have no idea who I am, I help rich people pay less in taxes, and you can do the same thing too. So let me explain to you how this works. It's called the short-term rental loophole, and here's how it works and who qualifies for it. If you're a high net income W 2 earner making over $300,000, you're probably paying about $80,000 in federal taxes. Okay. If you want to wipe that out legally, this is what you do: you buy a short term rental, you make sure you manage it, and you have a minimum of 2 stays by the end of the year. Then you're going to do a cost segregation. In other words, that's going to accelerate your depreciation and take those book losses against your high W 2 income. So let me explain to you how this actually works and who qualifies for it. If you have a W 2 income of about $300,000, you are overpaying, you're paying in taxes about $80,000 federally. What you want to do is the following. You want to be able to wipe out the $300,000, and the only way you can do this is with the short-term rental loophole. So what does it do for you? You need to buy a short-term rental. You need to put it on Airbnb. You have to manage it, and you have to have a minimum of 2 stays before the end of the year. Then you're going to do a cost segregation. What the heck is that? It's going to accelerate the depreciation on that big rental. That's going to create book losses. Hint, this is how rich people pay no taxes. Those book losses will go against your W 2 of $300,000, hoping that you can wipe out the majority of that $300,000. So now you're only paying taxes on whatever the $300K minus the book losses. This is a short-term rental loophole. It is legal, and I have successfully defended over 7 audits against the IRS. So you could either copy and paste what they're doing, or you can just troll me on the internet. The choice is completely up to you.